In this video, we are going to be doing an in-depth look over the fundamentals and technicals on AQST because it was asked for in the comments. Now, if you want your own stock analyzed for it in the comments, we'll get around to it when we can. But to get straight into it, one of the first things the comments were talking about was the analyst ratings. Now, I don't ever really take any impact from these analyst ratings. The only time I look at them is when you see a lot change on the same date, because again, this would be down to their earnings or something related to that. In the case of AQST, the only change there has been this year is Wedbush, and that's sort of $3 to $4. So to me, no significance from the analyst ratings, not paying attention to those at all. On to the next thing, and this is kind of more key, the fundamental, the actual release. I mean, this is information from their 10K. This is what is significant from their kind of long-term power. Now, this data is 2016 to 2022, and we've also put charts on here just on the right to kind of make it a bit easier to kind of look at a glance. So again, all this data is in millions. So their revenue, firstly, what's happening with their revenue? Decreasing. What's happening with their cost of goods sold? Increasing. Now, as soon as I see this, again, big negative. Revenue, you never really want to see decreasing anyway. But if revenue is increasing and cost of goods is increasing, then that's all right, because there's usually a marginal factor. When revenue reaches a certain height, for you to kind of increase your revenue, you're going to have to spend more on goods. It's just how it is. But in this case, revenue's decreasing while cost of goods are basically increasing. To me, big negative. So instantly red. Then going over to the gross profit, operating profit, and net income. Again, all of these basically move the same. And what do they all have in common? A big downtrend. So again, their revenues going down, cost of sales are going up, gross profit going down, operating profit going down, and net income of the company is going down from 2016 to 2022. Again, these are all bad signs. There might have been some leniency if this was happening, in 2020, 2021, when COVID could have been impacting it, but considering this was all starting before COVID and it's happening still now, again, just a big negative. Then going over to the total assets and liabilities, what we can see is their liabilities are having a big increase. Their assets are steadily decreasing. Again, they did kind of have a big pop in 2018, but since then, again, have been decreasing again. And we can see the liabilities are nearly three times greater than the assets. Not good. And then on to the final factor I tend to look at, earnings per share and total shares, basically. Now, again, these are diluted, so this means this accounts for any dilution that has happened in the shares going over 2016 to 2022. And shares diluted, you don't want to see this going up. This means companies are issuing more shares, they are diluting their shares. And what's happened? Steady increase. Going over to earnings per share, steady decrease. It's actually starting to recover a bit now, but overall pretty bad. Again, 2016, 2017, around the same. Then 2018, really a big hit, nearly $3 down. And so what you're seeing is it's starting to recover from that low of $3 in 2018. But again, it's still not even back at its 2016 or 2016, 27 level. So again, big red flag. So basically, as soon as I threw this data in here, again, these are the main things I pay attention to when I'm doing a bit of fundamental analysis on a stock. Because again, I'm not doing full in-depth fundamental analysis. I'm just looking at what are the key numbers, what's happening with them. And in the case of AQST, they are poor. Not something I would be looking to hold overnight, not something I would be looking to hold long term with results like this. Again, sometimes you can allow for negative earnings per share if you're in a high growth company. And again, I guess these companies are, people are looking for that high growth. But if you're looking for that high growth, you need to also take on that risk. And the risk in a case like this is this stock could easily go to zero. I mean, we keep seeing it lose 90% of its value, has its reverse stock splits, will do that again. And this is really why it's happening. It is not that hard. As soon as you look at their fundamentals, you can see this. So what we'll do is we'll quickly finish off with the technicals. Again, we did do a video on this recently. And what you will see is as soon as it becomes to these overbought areas, again, as soon as it becomes above its third deviation, so in this case, just above $2, as soon as the stock becomes above these levels, I would never touch it long. I know it's going to crash. Again, I can't say it's going to crash 100% of the time, but near enough. probably in the 3 years I've been using these deviations, very rare have I seen it close above and kind of just continue. The longest I really see them trade outside is maybe 2 to 3 weeks. And again, that's why I trade these as a swing bias opportunity. And what I'll do is trade them. Again, AQST has its options. You can short the shares, buy a call to offset the risk or kind of define your risk, or you can use credit or debit spreads. Again, the volume kind of needs to be there. But if there's no volume, to me, it's not a trading opportunity. But again, as soon as we came up to these levels, really, we knew it would start to crash down. And again, so anything above $2, extremely overbought, not something I would touch long bias at all. And if I was long before that, that would be my absolute final target. Again, we went through this when it was actually at its highs. So again, it's not saying this in hindsight. You can go back 3 days. We did this. Now it started to crash, come to the downside. And the reason this happened is on rumors of more dilution to the stock, on rumors of another offering. And what you tend to see, and people may be saying, oh, it's just luck that it happens, but what you'll tend to see is when stocks are up at these upper deviations, especially these small cap stocks, that's what companies do. They try to dilute those shares at the highs, because obviously that just makes them more money. So I guess you could call it a coincidence, but it happens so often. I don't really consider it a coincidence that companies purposely kind of do release information when they're at these extremes. So now we're starting to push to the downside. We came into the supports of 180, 173. We got that bounce off those levels. So again, that provided that long bias opportunity. And if we now go lower, we do have supports at 150 and 143 with a final level at 115. That's our statistical mean. So really, to me, there may be some short bias opportunities you can get. I mean, well, kind of long pops off the first time we hit these levels. Look to play those long. Or again, we can always look to grab them short by retesting this level, looking to play the breakdown. So again, those are the opportunities. As soon as we come into the 115, I would ignore the stock until we get to an extreme again, because again, that is fair value on a stock. Stock like this, I definitely don't want to be buying long bias, so I don't want to be buying it anywhere near fair value. So if I was, well, to me, again, not a stock I'm going to be buying long bias at all, but if you were, the 84 cents, 50 cents, and 20 to 25 cents if we hit down to those lows. But again, not even going to point them out because I don't think it's a stock we should be touching long bias. Again, if it pops to these highs again, then again, another opportunity to get some short bias trades. So I hope you enjoyed the breakdown on AQST. If you did, why not drop a like and subscribe? If you have any stocks you want recommended, again, throw those in the comments. And why don't you check out this video here?